Hey, good morning, Sean. How are you?
I'm good. How are you doing?
No, I'm doing well. We worked out some of those kinks. We got you on rock star status, right? Like pausing your delay, making the audience wait for you.
Hey, I don't know, but I'll take the compliment.
There you go. Um,
I'm never one to refuse a compliment unless it's undeserving, in which I'll say, hey, that's not deserving. But I'm always happy to get them. And yeah, no, I mean, it's I don't know what are we going to talk about today?
well, hey, I know a lot of people want to talk about Netflix, and
Oh yes.
especially considering that major reversal that we saw yesterday. So it played out as you thought. It did have that weakness. It was a miss on the subscriber growth, and that disappointed investors at least in the early stages, in the aftermarket, pre-market stages. And then we had that strong rally back. So walk us through your thought process getting into it, and then what you thought as that reversal was underway.
Yeah, well, I'm very close to shorting more. I tried some for a quickie from Kaneki short yesterday. It didn't really cost me anything. It didn't really work. I don't. Here's the I said let's talk about Westworld. So for people that don't watch Westworld, you can look it up. But they basically create incredibly human-like robots, right? Um, and and they don't die, or they die, but they can be revived and brought back to life effectively an infinite number of times. I think Netflix is Westworld. So in a lot of ways, because Westworld is also sort of it's a fabricated world, and I think the I think the valuation levels that Netflix has reached is largely due to a situation, again, very very much like spring of 14 or even the late 90s, where the valuation persistence is in many ways fabricated and is unsustainable. Now the question is, I mean, you can fight this sort of thing for a long time. I will say, hey, I said I was probably going to short it into the print. I did. That worked. So short-term shorts tactically have worked on this name, but it's been very, very hard to get. Well, any long-term short hasn't worked. It's been beaten up, right? But I really do think I mean, that was, if you think about a company like Netflix. When they don't beat the current quarter, effectively, they're not beating. It's not like analyst numbers got way too exuberant. I'm talking subscriber numbers, by the way. The subscriber numbers are effectively set by Netflix. So Netflix didn't even beat the numbers that they said they were going to beat. And usually companies, sandbag.
Uh-huh.
So I really, really do think we're getting closer to, or maybe we just saw the evidence of sort of a peak EPS cycle and a peak growth cycle. If that's the case, there's just no way the stock's going to stay up here. They can prove me wrong, and maybe in another quarter, 2 or 3, they start getting what was the subscriber numbers? High 5 millions, I think, versus 6 millions. Hey, if they start getting 6.5, 6.8, 7.1, 7.9 million subscribers, on and on and on, okay, I'll be proved wrong on peak growth, but the valuation just doesn't make any sense here. So, but it really is. It's Westworld. So, however, if you're a pure technician, the bounce off of 344 actually made a lot of sense, because where was that? That was the top of the cloud. It was the top of a couple moving average lines. Didn't really coincide with any of the EMAs. It was probably pretty close to the 100 EMA, by the way. Mm-hmm. In fact, I think it was close to 100 EMA, but it basically kissed the top of the cloud and then bounced. And I pretty much knew it was going to bounce. I didn't think it was going to bounce 40 points, not on those numbers. So we see this a lot at the end. When a very loved stock, people just have an inordinate amount of faith that they can buy every dip and get rewarded. And if you bought for the 50-point dip, you got rewarded short term. But now we have to see this. The setup now. You potentially got a double top on it. You got the cloud. The cloud, instead of a strongly rising cloud, the cloud's going to be sort of what I call a flattening formation. You got rising 150 and 200 EMAs, which could probably catch it the next time. In fact, that's the thing I'm like, the 315 is the 150 EMA. I don't. To me, that's a pretty good target to shoot for. That's kind of what I'm shooting for on an intermediate to longer term tactical short. Is that 300, 315, 325-ish area. Because I'm just going to say right now, I don't think 344 is going to hold. If the next time the stock goes down to that level, I don't think that's going to prove to be support. It's got to get there, but that's kind of what I'm banking on now. And again, I'm going to be testing a lot of short-term shorts on this thing because I think bounces are have a higher probability of working to short them now. That's the camp I'm in.
Okay, and I'm glad you brought up the guidance because that was one of the things that I talked about with one of the guys here yesterday, that they issued that guidance and they missed the guidance. It's not like analysts who will, if the company doesn't issue that type of guidance, that type of metric, the analysts will just come up with a number and what have you. I had been curious if maybe that might change the way they issue their guidance. Maybe they start sandbagging. They haven't in the past that I am aware of, but maybe that flips the script a little bit for them.
It could, but you
because that was a big miss.
That's the thing. Honestly, okay. Now, am I biased and do I know what my biases are? I do, right? So I'm biased to the short side of Netflix. I'm biased that. I remember us talking about how expensive the stock was at $200. So I think people forget that. They forget certain facts because of a stock price. I don't do that. If I know a stock was very expensive at 200 and it's 400, I don't just sort of ignore. I don't say, oh, I must have been wrong on that stock being expensive at 200. It just is that much more expensive now. So at some point this has to kind of be rectified. Here's the other thing too. I think people. So I look at TAMs a lot, and I look, total addressable markets, and I look at the competition. If there's anything I've done a pretty good job over a number of years, probably 10, 15, maybe even 20 years or more, is being pretty good at assessing the TAM and how a TAM for a company is going to expand or contract or be threatened. The one thing I would say, the biggest bull case for Netflix from a technology standpoint was that nobody had better technology than them from a consumer standpoint, meaning if you're using other competing products years ago, well, the algorithms weren't as good. The Netflix algorithm was way better, meaning if you're good at clicking what you like and what you dislike on Netflix, it really delivers really good results for you about your interests and what you want to watch, and it's like Spotify and Pandora, right? If you're good at selecting what you like and dislike, they deliver a pretty good music experience for you. Netflix did the same thing, still does, by the way. So the experience on Amazon Prime and on Hulu and on other competing products years ago wasn't nearly that good. But if you look at Amazon Prime today, and you look at the sound quality, the picture quality, the selection quality, their algorithms are learning very fast and getting better. I'm not going to say Amazon Prime Video is as good as Netflix yet, because I personally don't think it's as good, and I think most reviewers wouldn't either. However, the one thing you can say is Amazon Prime Video is way better than it was 18 months, 2 years ago. Mm-hmm. So it was way behind. It's not that far behind anymore. Hulu, I would almost think the Hulu platform is as good, and in some ways I almost prefer it now. Again, I wouldn't have said that 2 years ago. I wouldn't have said the Hulu technology and the Hulu platform was as compelling as an underlying technology that Netflix uses. At this point, I think it's pretty equal. So that's the other thing that happens when a company gets bigger. There's more market cap, there's more market opportunity. Others start chasing it. And I haven't seen any analysts, even the bearish analysts, I don't really see them say much about the fact that the competition has improved a lot. And that's something I do spend a lot of time on. I think there's a competitive issue. By the way, when I look at Tesla, I look at the same thing. Like I look at Tesla and I say, hey, let's forget about car valuation metrics versus technology valuation, but let's just think about car technology. Tesla doesn't do Formula One. So Formula One is the fastest, best racing cars in the world. A lot of Formula One technology gets proliferated down into automotive technology for those companies. the leading F1 companies are Ferrari, Mercedes, McLaren, Renault, companies like that. So Honda's an F1 engine provider. So Tesla's not an F1. There's a lot of super good technology in F1 that's going to be, and Porsche's not in F1, but they're kind of in everything else. They certainly have F1 type technology. So, in another year or two or three, who is going to have technology that's equal to or better than Tesla? All the companies I just mentioned. So that hey, if Tesla was an F1 and they were one of the top three racing companies in F1, and then I could see that F1 technology channeling down and entering Tesla cars at some point. I might have a more bullish opinion of Tesla. Tesla's not an F1. They're nowhere to be seen in racing, for that matter. So, the best automotive technology tends to come from the highest entrants in racing. So we'll see what happens. I mean, that's another great example of kind of a competitive situation and a TAM that, frankly, I don't hear anybody talking about. So we'll see how these things play out. But as far as Netflix is concerned, the quarter wasn't good, the guide wasn't good. They didn't even beat numbers that they basically kind of provided. And right now everybody's just sort of ignoring that, and they bought the dip. Well, that works until it doesn't. So, hey, a stock I loved was Overstock. Everybody bought the dip. Well, when that thing finally caved, it gave up 60 points of upside. And that was a name I liked a lot. And then, once it got to a certain price, didn't like it very much. So we'll see what happens. But and not to beat the dead horse, but again, this just was an expensive stock at 200. It's doubled this year. So, I don't really know where it goes if things get bad. So that's the other thing. Sometimes you just have to be aware of the risk of something. And I just think a lot of the people that are long, staying long, buying all the dips in Netflix, I don't really know if they're aware of the risks.
All right, so you're potentially looking at this as another short. Are you waiting for this to close the gap, or do you have something else in mind?
That would actually be fine. I don't really need it to. I think I'm just kind of watching the chart, and I mean, I'd almost like to see this thing kind of roll over. Just a smidge. Sometimes I do a lot of the traditional things. Whatever ends up being the 2-3 day low, not the 344 low, but the next low. So today's low is 372. Does that breach, and where does that go? Yesterday's low. The low that I sort of look at beyond the 344 low is the 375.40 low. So. Right now it seems to kind of be in a kind of testing a 10-point range. I kind of think it'll give way, but yeah, I'd kind of like to see it trade below. I think below like 370, and then if it starts caving below 370, then it opens up. Opens up that downside. And right now there's not really much support below 34 until 344. That's pretty meaty. I mean, if there's a 30-point range in something. I can define kind of where my upside is, and I can say, hey, it opens up to 344. If it breaks 344, I don't see anything catching it until like 315, 320.
Okay, where did you end up covering that short?
Well, I'm still well. I tried for some common yesterday at 375. I probably covered it pretty close to that price. Might have lost a couple points. I'm still in put spreads, and I'm planning on staying in put spreads at this point for a while. So the question is, what does my current put spreads are 380 by 360s. My next set, I might stick with that, or I might actually roll them down a little bit. I've got a few weeks of time. So, but yeah, in fact, I think my next set will probably be 360 by 340s or 360 by 330s or something. By the way, I like put spreads with this because they don't tie up a massive amount of capital. Mm-hmm. So that they can if I do a ton of them, but for the amount and the prices I'm getting pretty good payout. I think I've talked about this. I don't like to do a put spread if I have to pay $12 and my max is 20. Right, that's not even 2-to-1 payout. But if I can pay 7 or 550 or 6 or 8, and my payout's 20, or better yet, my payout's 30 points, meaning there's a total 30-point spread, right? You don't get the whole 30 points, you get 30 less what you pay, or 20 less what you pay. But if let's say I pay 7 and I can make 20, that's a net of 13. That's a good payoff. So that's how I like to line up put spreads. I've seen some people do put spreads where they pay 12 or 13 points, and they, so they can only make a net 7 or 6. Those are not good to do. So the math kind of has to be there and kind of has to work. But no, I'm short, and I plan on staying short some put spreads. I might even do some. The problem is the puts are just so expensive. But I'm starting to think about maybe doing some longer dated stuff. We talked about that. In fact, somebody asked a question on Tesla where I said, it might not be a bad idea to do some very low probability puts way out of the money. So like I think I said something like Tesla 200s when the stock was quite a bit higher, and it did go to 244. So those puts probably went up a lot. But the bottom line is, you maybe could look at something kind of crazy, and like what would be a crazy price? Wouldn't it be crazy if Tesla went to Netflix went to between 200 and 250? To me, it's not that crazy because it started the year at 200. Might have even been below 200. But, those puts would probably be pretty cheap. And if something really weird happened, or again, I don't think it'd be that weird. I think the Tesla bulls or the Netflix bulls would think it would be very weird if Netflix went to, 200 or 250. But I don't know. I might look at some of those because those would be very cheap. And, just think of what the payoff would be if it actually went there. Right? Mm-hmm. You're not getting 2-to-1 or 3-to-1 payoff. You'd be getting 8x, 10x, 15x, 25x, right? So I might start kind of looking at that. I kind of like some cheapy plays like that sometimes because sometimes some cheap options, which most people think have a very low probability of occurring, actually the payout's pretty good because the probability of occurring is actually quite a bit higher than, I guess, the pricing mechanism embeds. Not to get too wonky with math, but that's kind of how I think about it.
Okay. Why don't we move into a sector that we don't talk about a lot, but a stock that you have mentioned in the past, and that's Goldman Sachs. They just came out of their earnings a couple of sessions ago, and I can't remember. Did you get involved in this one officially?
Yeah, no, I know. I have same thing. I've kind of toyed with some longs. I will probably be long some of this pretty soon. Meaning I'm going to get long and stay long from an investment perspective. By the way, I like the quarter. This is probably my favorite finance stock at this point. Mm-hmm. So put it this way, I've been a short-term trader here and there. But I'm very close to saying that this. Here's what I officially did: is I put it on the focus list. So it's on my focus list. So as a recommended pick, and I think it's a great addition. Now again, it's not a tech name. That's most of what I do, but it doesn't have to be all of what I do. And I just think if I line this up from a long kind of risk reward standpoint versus most things out there right now. I think it lines up pretty good, and I think my target is something like 300, 310, and that's not a crazy target. That I don't think that would be that hard for them to hit. You need to get. Here's what you need. You just need money to be willing to buy finance stocks again, and we could be getting pretty close. Morgan Stanley had a really good report. Again, I don't know why Goldman's not up more. Frankly, I thought the Goldman report was great. There's some debate. Has Goldman lost its way? Are they not the risk, the optimizing risk takers they used to be? I don't really think the talent at Goldman is much different than it's ever been, personally. I just think, again, people try to make sense of a stock price by putting rational arguments around it. The stock price is where it is because it's out of favor. It's that simple. So if it becomes an algorithm, if it becomes in favor, algorithmic buy programs start seeking it, and the stock's going to go up a lot. So this is an easy one. If you get a rotation and finance stocks become in favor, this is a win. So there's a lot of stuff that lines up to make this a pretty high probability long.
Yeah, it also looks like it recently broke a trend line, so I was curious whether...
That's right. I did look at that. So, I have been long it. It's, part of it is I like a lot of what I have right now. So I get pretty picky. I mean, am I going to sell a bunch of my Twitter to buy Goldman? Probably not. Am I going to sell AMBA to buy Goldman? Probably not. I'm not going to bore you with a bunch of names, but so something I've got to feel like I basically got to shake something loose, and I don't really have anything that I don't like quite a bit right now. But there could be a point if I get a big spike at one of my other names, like when Mule was bought out, I did quite a bit of portfolio adjusting after that because I had a decently sized position in Mule. Okay, got bought out, and I got to redeploy that capital. So that's kind of what I'm waiting for right now. I mean, for me to make any, especially if I were to take a sizable position in Goldman, I kind of have to make at least a somewhat of a notable position change. And again, I mean, like one name, I just thought I'm not going to sell Qualcomm to buy Goldman. So as much as I like Goldman, I just like Qualcomm more. So there's just certain things that are just, now if Qualcomm goes up 35, 40, 50 points, okay, then I'm talking. So, and as you know, when things change, they can change quickly. I mean, it didn't take very long for Twitter to go from, 22 to 44. So I can wait and see what happens and see if a name that I currently have, gives me a good exit. So that's kind of what I'm waiting for. If I get a good exit on something that, Goldman could easily be one of the first stocks that I rotate money into.
Okay, that's good to know because it's not based on actual price. It's more based on the allocation of the portfolio and how it's made up.
That's absolutely right. And the other thing, and I've said this a bunch of times, I'm not really wanting to increase a lot of long exposure right now. So I'm sitting on a lot of buying power. I'm sitting on a lot of cash. So cash is a position, and right now I want cash to be one of my largest positions. So same thing. I don't want to sink a bunch of my bunch or all of my cash into Goldman and a bunch of finance stocks I like, and then have the market do a 10 or a 12 or a 15 or a 20% header to the downside. Now those stocks will probably hold up better if that were to occur, but I have a hard time believing if the S&P went down 10% that Goldman wouldn't go down. So, right now I'm tactically keeping my cash pretty much as high as it's been in years.
All right, so before we dive into some of the listener questions, because I'm sure they want updates on some of your holdings and some of the trades that you had put out there from prior conversations that we've had, let's quickly touch on where we are as far as your thoughts on the overall market, the dynamics in the NASDAQ. We can look at the triple Qs or whichever one. But as far as your sentiment data, as far as where you're seeing the market going, we've had a nice reversal mostly yesterday where it really bounced when Netflix did. So where are we at in terms of the way you process the overall broader market?
Yeah, no, I actually think we're getting pretty lined up for if we do put this. Again, the sentiment stuff doesn't always work. It works a large percentage of the time. We are kind of heading into a sentiment point where the odds of a sell-off, I would say, are increasing quite a bit. Again, doesn't mean it's going to happen. Doesn't mean it has to happen. What I will say is probably a better way to say it is a sell-off, if it were to occur here fairly soon, probably has the potential of being bigger. So because the last couple we had weren't. I mean, we actually did have a pretty good 2-day, 2, 3, 4-day downslide the last time my sentiment score got really high, but it didn't really stick. I mean, we bounced really good, and I think we've had like 6 or 7 or 8 out of like 10 up days since, or maybe it's been like 7 out of 10 up days since that last kind of NASDAQ shot lower. But that's probably the best way to say it. I think the odds of a sell-off are kind of increasing. But I would say that the maybe the magnitude of the sell-off could be a little bit higher than normal. It's again we're basically kind of hitting sentiment scores that I measured that were roughly. It wasn't as high as I had in the January sell-off, but it was whenever that second sell-off was the year, either late February, early March. We're kind of basically heading into a pretty hot sentiment reading, which was equal to that second sell-off we had earlier this year.
Okay,
but it's not diabolical. It's just elevated. It's like elevated and kind of staying elevated. We haven't seen a big spike in it. And maybe that's what we need to culminate it. Maybe you need a big flush, like a buying flush, and that would spike it. By the way, that reminds me. So one of the last couple times we talked about Dennis Gartman and how you and I actually liked a lot of the work he did and kind of respected him, and he gets panned a lot.
Yeah.
But the one thing I did say is I think he's very good when he sticks to commodities. He's far less good when he talks stocks. He said something, I didn't hear it. I got to look it up, but he said something like that he sees the potential for a big huge market thrust higher or something. I'm trying to find. Oh, an exaggerated and stunning rally could be on the way. Okay, I'm just going to say this. So there are times when when he gets the most bullish on stocks. I'm going to say so. There's been times that's been a decent contrary indicator. Doesn't always work, but I watch for stuff like that. So I'm just going to put it out there. We'll see if this ends up being a decent contrary indicator again. Because again, I think he's much better at commodities. I think he's kind of okay on stocks. And I have seen him make some big calls and then kind of end up kind of with egg on the face, right? But if you're in the public and you're making tons of calls, you're gonna have plenty of times you can have egg on your face. So you can't be overly critical of somebody for putting an opinion out there.
Yeah, I actually respect him for actually having the courage to do so.
That's right.
Especially
make the call and deal with it.
I'm sure he reads his own feedback of hey, nice call, Gartman, every time it's a fade. But again, I've actually had the privilege of being a subscriber back in the day of his stuff, and it was always good stuff. It really helped me get a good macro perspective on things. Even if I never took a single trading idea, he really did bring home a lot of concepts. And hey, this is how the bonds should react. This is how bonds and other places should respond, and the currencies that you don't even get to trade these currencies. He's always talking about gold and he used to gold and yen terms, and no one can trade that. But I mean, unless you're very sophisticated. But just to the average investor, he does bring home some concepts. But and I still give him the courage or give him props for the courage to go out on a limb, whatever. I take that far more to heart than the him and Han analysts that come on and just it could do this, it could do that. It tells me nothing. And I'd rather learn from somebody's mistakes anyway. But that leads me to a question from one of our listeners that asked, because this plays right into it, what could be the potential signals of the end of the tech rally? Is it Gartman?
Well, maybe. I mean, and again, I don't think it's that simple, because what I've been saying is we could get kind of an end of the FANG type rally, but I actually think we could I mean, here's a stock, and I don't know, we don't have to spend a lot of time. I'm going to put this a note. Adtran, ADTN, exceed just a ridiculously cheap company, super undervalued, been out of favor a long time. It's a telco equipment provider too. They actually had pretty decent numbers. The call was pretty good. The call was probably one of their best calls in 2 or 3 quarters. It lines up with kind of my fundamental bottom call in the fiber optic stocks, which I believe Q4 was the fundamental bottom for that group. Adtran is kind of an outskirts player of that group, because they do some other stuff that's not in the fiber optics game specifically. But an Adtran could see a lot of money flow its way. So hey, if you consider tech FANG, well, yeah, we've been seeing signs actually that the FANG rally could be waning, but it persists. But it's not, aside from Netflix. I'm trying to think. Netflix is up massively this year, but I'm looking more for a rotation. Now, the rotation usually starts because you get a correction which takes everything down, and then once everything goes down, maybe some stuff goes down less. But then when everything goes down, people come in, they start shopping. So it really depends what they shop for and what they buy. If they keep buying FANG, then this persists. Here's the problem: the longer it persists, the worse the worse the unwind is going to be. And I'm not going to be exposed and get killed in that unwind. That's how I've now. I might make money shorting the unwind, but I'm not going to be long a bunch of these FANG names when they do unwind, and then it becomes really hard to get out of them because your psychology to get out of something is far different. You become a hope trader. You're like, oh, I'll just get out in the next bounce, or man, I just took a 50-point header. If I can get it to where I'm only down 35 points, I'll get out. And then some people even compound say, oh, geez, it's down 80. I guess I got to buy some here and average down. So I'm just not even getting. Now, I'm not saying I would do any of those things, but that's what happens to the vast majority of people. So I'm just not even going to get my position where I can get mentally messed up by being on the wrong side of something like that. But yeah, no, I mean, I think we're seeing signs. It's just, I mean, we'll see. I still think this is very much like the spring of 2014 scenario where the stuff persisted. The hot stuff stayed hot for probably a good couple quarters longer than most people thought it could. But then, man, when it only took about 6 weeks to just really, really unwind. And then when that was stuff I liked. I mean, I was buying stuff early thinking it was done. And I'm trying to think I think I was buying some Splunk back then. I don't know what the ultimate low, but I mean, I was buying Splunk a full 12, 15, 17 points higher than where it finally settled and bounced off of. Now, I didn't mind it and I kept it, but, and thank God I didn't full boat it, but that's the kind of stuff that'll happen. I think when this thing ultimately turns and unwinds, probably there's going to be more downside than most people think. So when I'm on with you and I'm saying, yeah, I think Facebook now is okay at X price, I'll probably be early. You know what I mean? Mm-hmm. Because there, but I don't. That's a simple question, but there's almost no clean way to answer it. But again, I actually think we are seeing signs of it. I mean, here's an interesting little sign. So I look at the NASDAQ and percent of stocks above 50, 150, 200-day moving averages and things like that. Well, that peaked. So the percent of stocks that were above the 50-day was almost 78% October of last year. Then the next high this year was 73, 74%. The next high, in fact, it just hit in June, was 72%. So it's each peak it's basically now you've got a series of lower lows or lower highs forming. It's meaning fewer stocks are having a harder time either getting to new highs or trading back above their respective moving averages. So that we'll have to see what happens, but there's signs of it. The obvious answer would be, well, we'll know when these names are 20% lower and they're not bouncing. I mean, that's a cop-out, but that's because we know how this game works. We never really know until after it's happened.
Yeah, tough job. We got to predict the future, and
it's always changing. So, but I mean, I think the best thing you can do is just line up and increase your odds on both sides. I mean, I will say this: I think we're at that point, and hey, I kind of been wrong on FANG being done. But the 2 or 3 times I said we're going to correct this year, we did, and the FANG stocks did go down. They just ended up going back to old highs or going to higher highs, which I didn't think was. I'll admit I was wrong because I didn't think we'd see all the FANG names go to higher highs multiple times this year, especially after those first couple highs. So hey, again, we all live and learn and adjust. But like I say, the higher these names go, I guess just the more dangerous the setup becomes. It doesn't necessarily mean it's more dangerous for tons of stocks. There's tons of cheap stocks out there. I mean, Redfin just guided up. Redfin had beautiful numbers. They did a small secondary offering. I think that stock's gonna work higher. I think Redfin would withstand a big sell-off really well, and I think money will rotate into Redfin. But Redfin probably won't get a really good move higher until the FANG trade breaks to a certain degree. Because if all the money stays in the FANG trade, there's less money to find other tech stocks to buy. So, I mean, for most of my longs, honestly, they probably won't work as well as I want them to until this very small number, this very narrow leadership trade breaks and then winds.
Since you brought up Redfin, one of the listener questions had to do with the weak housing start number that we had today, and it was considerably below expectations. And with that said, wanted to know your thoughts on how that may play into your analysis of this stock in particular, Redfin.
Yeah, it doesn't affect it that much. I mean, there's at the margin, it hurts it a little. But I actually kind of think that we're going to go into a stronger house. We've talked about this. People have been trying to digest slightly higher mortgage rates, and that's definitely put a crimp in home sales. Plus, the other thing is housing prices have risen a lot.
Mm-hmm.
So you probably have a lot more people listing homes, but you probably don't have as many people buying homes. It basically what I call it's a trader's market, meaning you probably can't sell a home until you or buy a home until you sell your old one. So you're going to sell your old one at a good price, but then you're going to have to shop and buy whatever one you're going to buy. It's also going to be a higher price. So it's a swapper's market as opposed to a fresh buyer's market.
Mm-hmm.
And again, we're digesting higher mortgage rates, but they haven't really risen that much. But in fact, I think people have maybe made too big of a deal of that. But Redfin's really just is a TAM expansion story. So it's a total addressable market. It's going to be increasing. It's going to grow market share in the market that they operate in. They're also going to probably enter new markets. So again, the guide was very good. I mean, they didn't have to increase their guide. They could have done their secondary without increasing their guide. So they must know numbers are pretty good if they guided up, and it was not an immaterial guide up. It was a pretty decent guidance increase. Let me just look. Yeah, I mean, it wasn't a 10% guide up, but it was like in that 4 or 5% range. And again, we're already talking about numbers which have pretty good growth over prior year. So it just lines up really good. But again, until some money comes out of a couple of these other hot stocks, I just not sure. I don't think there's a ton of fresh money that's going to buy Redfin off from scratch. I think some money's got to come out of some FANG names or some other hot stocks, some cloud software stocks, and find homes and some new things. And I think that's what's going to happen. So really the question is, how does the next correction proceed? Does it take everything else, and then does the cheaper stuff get money, and is that the thing that makes finance and maybe energy stocks go up again, or do those areas and does cheap tech hold or even rise as other stuff comes down? And we won't know until it happens. And we've seen both sides of that this year. The first big tech sell-off we had, a lot of my names actually went up. Twitter went up during that whole sell-off. And then the second sell-off we had, it was more of a sell-off that kind of took everything down. And then buyers came into the cheaper stocks. But then buyers also came into the expensive stocks again too. So the rebound kind of took everything up. So we'll just have to see. But I think Redfin sets up really well. Because this is one of the more rare things today. Most everything that has really good growth, meaning that 30, 35, 40% growth, that stuff is traded really strong. So Redfin's probably one of the last names I can find that's like a 30 to a 40% year-over-year growth name that really hasn't had much love. Most of the other stuff, well, in fact, my whole focus list of 8 months ago to 12 months ago was filled with like names like Twilio and Nutanix, and I'm probably for Coop, Mule. Well, those were the high growth names that hadn't worked yet, right? I'm sure I'm missing like 5, but the market's taken all those names up. I've taken them up to a point where I'm actually even have been short or thinking about shorting a couple of those names. So, but Redfin's really one of the, I can't find too many names with their growth that haven't had a good year this year. They're one of the few.
All right, so now I'm going to bring you to a question, and I'm going to read it out loud to you. I don't know if you've seen this one yet or not, and I appreciate the listener's candidness here, or candor. Yeah, maybe that's the word. You know what I'm great at, Tech T? Butchering the English language here.
Don't worry about it.
So, but it relates to one of your stocks, Trivago, and it says, I jumped the gun last week and bought Trivago, although you clearly said wait until the $4.90 to $5 area as a buy stop.
Yeah, I put a buy stop on that. Anyway, go ahead. I interrupted you. I'm sorry.
Yeah, okay. So he's not happy with the action that he's seen, but he believes it will change. Or no, I'm sorry. Let me just read it for you. With the way it's traded since he bought it, but I know it will change up or down with EPS. I suppose my game plan will be to hold it, and if it drops, to double down, or be happy if it pops. Any additional thoughts for a guy who didn't listen?
Well, he's probably in it at a better cost than me. I mean, I've bought and sold this name and made some good trades on it a few times, but I'm sitting on some Trivago for sure at $8. So now it's not my cost in it. I think my cost is quite a bit lower. But the bottom line is, I mean, if that was his first buy, I think he's sitting pretty good. I wish my first buy was in the 450 to 5 range. So this is one that I have a losing position on. I'm not very concerned about that. But there's a reason I put that out there. This thing really does look set up. You can probably even see what I'm looking at on that buy stop point. You got a trend line break. The buy stop basically is the trend line break, but it's also 2 or 3 other things. It's also a key moving average. It's also an entry into the daily cloud. There's some 1 hour and 2 hour charts I look at too, but there's actually a lot of stuff right there that if it can just get there and close for a few days above that 490 area, man, this thing could go. And you know what might happen? What might happen is, here's what I hope doesn't happen, but it might, is they might get some good news that nobody expects, and they might gap through it. And then I have to deal with buying it higher because it gaps higher, right? Mm-hmm. So and that would still be okay. But yeah, no, I mean, if he bought some, I mean, he's and he didn't buy it when I was buying it, close to double digits. I mean, I probably bought the most of this, by the way. I want to say between like 670 and 750 is probably where I have the biggest chunk of my position. I have bought some lower too, and I don't buy lower because I think about lowering my cost. I almost never think about my cost, by the way. I get lots of questions on cost basis. I don't really worry about that. I just look at the value of something, right? And so like if I own something higher and I think something's worth more, I don't worry that my cost basis is higher. But I won't keep buying something if I don't like it. So, I mean, there's 2 names I can talk about, and this relates to this, would be something like Pi. I honestly wish I'd never been involved in Pi. But the smartest thing I ever did is not keep trying to buy it and buy it and buy it and buy it. I kind of just bought it 1 or 2 times and just kind of left it alone. Guess what? I'm back to even on it, or maybe even better. So kind of my worst cost basis is back to even, and whatever I bought lower made money. And that's okay. I mean, in other words, you don't have to squeeze optimal perfection out of every position or every trade. But Trivago, I think, here's the thing I think is interesting about Trivago is it's a potential M&A play. I think a lot of the weakness in it has been what I talk about, this proximity to 5 and what happens to stocks that are close to 5. They basically get engineered to drop below 5. And then because once they go below 5, they usually sell off even more. And then they settle down, they sit there. But I kind of think it's reached sort of a max pain point. In other words, I think they could basically have more bad news. I'm not sure it would really go that much lower. And I think M&A value could be quite a bit higher than the current price. But we'll just have to see what happens. We've talked about some of these cheap stocks that just get crazily cheap. I mean, even not just cheap on a valuation point, but cheap on price. Things like Groupon, things like Trivago, things like GoPro, and what happens sometimes is again, people believe that they should be trading here. Well, sometimes they end up going up a lot because they probably shouldn't have been trading there. Not to harp on Twitter, but just a great example we all know about. I always argued that the stock really should never traded probably much below 20. When it almost went 50% below 20. And it didn't take much good news to get the stock to triple off 15. I mean, really, it's not like Twitter has produced earth-shakingly bone-crushing beats yet. They could still, but it's just been kind of modest, minor improvement. The stock's tripled, right? And that's kind of Trivago, Groupon, some of these other, Nutanix, by the way, was just like that. It didn't take great news for Nutanix to go from, 18 to 45.50. They just quit missing. And then the beats were okay, but I don't know if Nutanix had anything spectacular on a way to a triple or a quadruple off lows. So Trivago could line up exactly the same.
All right. I know we have a couple other questions here. Let me get to them. One of the listeners wants an update on some of your shorts. Are you short? Are you short Broadcom AVGO?
No,
I
I
didn't
should have
think
been.
so.
I said I liked it as a short, but I never did. Really, my only shorts right now that I'm currently active. Again, this isn't necessarily short-term trading. This is stuff that I think is meaty, sticky. I'm in. So IGV, New Relic, Netflix currently. Let me go down the list. I
Adobe?
think I'm. Yeah, Adobe. Yes, Adobe.
Because on his list were Adobe, AVGO, and NEWR.
Yeah, no. So of those two, Adobe and Newer for sure. And Newer, I'm kind of thinking about increasing too. Newer's kind of a potential double top. Now, I think some people might be afraid of their quarter. I'm going to say that there might be a potential for Newer. Newer might be again might be kind of approaching that potential peak EPS type situation. And when those happen, those stocks can rob. I really love looking at Splunk for this group. Because here's my assessment. If Splunk is absolutely the class of the space, Splunk's already taken a 20-point heater. Now it's healed a little, but I mean Splunk's taken a 20-point heater off of highs. The smartest guys that believe in big data, AI, everything that Splunk and New Relic and Varonis. By the way, I was short Varonis. I'm not short Varonis now. That'd be another one on a big pop. I'd get short. If whoever's selling Splunk to get it to drop 20, that makes me nervous on the names that aren't as good as Splunk. I mean, their technology might be as good, but they're not as big, right? They don't own as much of the market as Splunk does. So, I find it very interesting that New Relic sitting here at testing old highs again, and Splunk isn't. And I'm gonna say that Splunk is a pretty good tell for this group. There's another one I'm looking at, and again, this was a stock I recommended as a long before. I don't know if I ever owned this. I think I did. TLND, Talend. Pretty sure I was long this one, but I didn't milk this pretty good. But I think I caught a pretty good gain. This was never a focus list stock, but I mentioned I like this. In fact, I think I mentioned I like this in front of a couple EPS reports now that I remember. But this thing's high. Another name I like is AYX, long term. But AYX I think could be sort of dangerous here. Again, why? Because it's basically trading at highs and Splunk's not. So if we're in a market that's selling off, the best big data stock, but yet is not selling off the other guys in the group, then I'm going to be cautious. So that's why I like Hortonworks, and that's why I like Cloudera, because Cloudera are just like the ignored, the ignored, group of these things. They're really, really cheap. They're really beaten up. And by the way, the growth is relatively the same. In fact, Hortonworks has higher growth than most of these stocks I just rattled off. Cloudera's growth isn't so good because they have had a little bit of a misstep. But we've talked about this, not to replay the whole thing. But I kind of think Cloudera could set up like Nutanix did. Where they had a little bit of a stumble. Wasn't exactly terrible numbers, but just a little bit of a stumble. Stock got absolutely killed. And then if they just sort of get back to reporting normally, the stock can basically do what it was going to do, which is probably go up quite a bit. So I'm pretty cautious on all the high value names in this big data space, especially because Splunk is not telling me that you should be cavalier about this group right now. If Splunk was surging and trading 122, 126, 132, I'd say, man, Splunk's probably going to crush it again, and maybe these other things are more dangerous shorts. So if Splunk can't get back to highs, then it makes me a little bit more confident on the New Relic short.
All right, and I think this will probably be the last question, and it's regarding CYBR. Let's take a look at this chart.
Yeah, love it. Love it.
CYBR. And the actual question is, since it's running, are you looking to reduce your exposure in this one?
I think I have posted that I reduced this. If I haven't, I will. I have reduced this a smidge, not much. I thought I did post that, by the way. But yeah, I've sold a little of this, but just because it's run, almost 30 points off those low 40s. I still like this name though. I'm still sticking with this name now. If somebody were to ask, a better question might be, well, wait, if you're short New Relic, well, why aren't you short Splunk, or why aren't you? Well, if New Relic I liked when it was a $30 stock, and now it's 110. Splunk I liked CyberArk I liked at 42, and it's 70. That's not triple, or it's not a triple plus. So I think the valuation characteristics are way different. This thing looks like a stock actually that's kind of breaking out and can go higher, and it's catching up to what it probably should have done quarters before. By the way, this probably in my brain, the reason I said Splunk is because this stock and Splunk traded very similarly. They both kept having very good quarters, and neither one would move. Well, Splunk moved first, and Splunk, Splunk gets a decent chunk of business from security as well. But CyberArk is doing what it should be doing. So I'm sticking with roughly 2/3, 3/4 of my position, and I guess will for a while. I don't know. I don't know what would be the thing that would make me sell it. I mean, at 110, I'd be a seller. What's a triple off 42? Triple off 42, I'd be a seller. But no, I like the stock. I like it a lot. I like it long term. I actually kind of keep wondering why FireEye isn't acting better. But again, stocks move when they move. But no, I like it. I'm still long. I did reduce it a little bit. Again, I apologize. I didn't post. I honestly thought I did. So yeah, no, nice name. I think it's got more upside. I don't know if I do think it's risen enough that they probably better have a pretty good report. But if this thing were to drop 10, I'd probably buy it. So this is a name I want to buy on dips if I'm given dips. But the way it's acting, I expect them to report well. In fact, I think security is going to report well. So I'm hoping FireEye gets some love off some of this move. Another one of my laggard names that I own in this space, by the way, is Imperva, IMPV. That's finally had a decent little move. Again, hasn't done a lot, but 56 from this thing just could not get above 45. So it's finally breaking into a new range. I mean, this thing's still very cheap. I think I said the same thing on all these names. I said the names in
I think we might have lost Tech T. Let me check in with him. Tech T, are you still with us? All right, let me see if I can reconnect with Tech Trader. Bear with us.
Uh-oh, what happened? I was talking.
Yeah, you were talking. Somebody must have cut you off, man. It wasn't me.
I had a call come in, but I said, I declined the call. Anyway, I don't know where I got cut off, but I was saying Imperva. I don't know if you heard me say.
Yep.
Imperva's acting better.
Mm-hmm.
That's still a cheap stock. FireEye's still a cheap stock. I can't call CyberArk dirt cheap anymore. But this is what stocks do. It's sort of like, once Twitter went from 18 to 30, didn't mean I still didn't like it a lot, but it just wasn't as cheap. It's not as cheap at 30 as it was at 18. So CyberArk's not as cheap at 69 as it was at 42. But that doesn't mean I think the upside's done on it. What's my here? I think my price target on CyberArk is 75, and that's my midpoint. So I can value it higher than that. But I'll see if I decide to move it up when it hits 75 or higher.
All right. Well, I think this is a good place to stop for now because we have a bunch of earnings that we're going to be able to talk about over the next 2 weeks. So really, starting next week, we really ramp things up, and we will have a lot to talk about, and most likely we'll get you on even more frequently than we do now. So I know you got a lot of prepping to do. Is there any parting shots that you want before we head into the big earnings season for tech?
Well, the one thing I'll say is, if I'm not mistaken, I think old Mr. Softy and Skyworks both report tomorrow. So, the market, strong day yesterday. Yeah, we'll just see.
And I'll interpret that for everyone. Mr. Softy, Microsoft, right?
Oh, sorry, Microsoft and Skyworks, SWKS. So, we'll see. Again, some of these, really, really extended stocks. Now, Skyworks isn't as extended Microsoft is, but, are the reports going to be good enough to hold the stocks at levels, let alone let them rise? So that my theme this quarter is, and I haven't said this as much. I mean, a lot of quarters, I'm just like, yeah, I think it's relatively a quarter you can probably buy in front of reports. This quarter, aside from a few names, I think you have to be more tactical and more careful. I wouldn't be buying any Microsoft in front of the print. So we'll see. But Netflix again wasn't a good report. Market dealt with it pretty well. That can happen for a while, but if that becomes a theme where these big key leading stocks, which has represented, most of the upside of the market this year, if they don't deliver, then that kind of sets up, my short bias a little bit. But yeah, I don't know if Microsoft's going to be another barn burner. They've had a string of exceedingly good reports. Again, I'm not projecting as much of a beat. The magnitude of the beat for them, I don't think is going to be as high this quarter as it's been last 2, 3, 4 quarters. All right. Now, you're probably going to ask me, am I short it? I'm thinking about it. I'm thinking about doing some in front of the print. But we'll see. I'll see if I do that before the print tomorrow.
All right. Well, don't forget to tell everyone if you do. Sound good?
Oh yeah, no, that's the. I've been mulling that one over. Here, if I don't, there's a reason. I don't. There's not a lot of times. There's just not as much short-term juice. Hey, we saw Netflix move 40. Microsoft, a big move would be like 7 to 10%. And sometimes if that's the move, sometimes it can be hard to get an option structure to pay off, because you need more than that, right? If that's what's expected, you need something more than that. And I don't like giving the option market money. In fact, I'm pretty good at not giving the option market money. So yeah, we'll talk next week. Google's Monday, so we got Microsoft Thursday, Google Monday, and then some other stuff starts sprinkling in. So at least we're getting a little more volatility. Yeah, I'm going to tell you, yesterday was a really interesting day, and I actually think that I'm going to conclude by saying I think people are being too cavalier. I think people are way too aggressive buying that bad Netflix print, and we'll see what ends up happening because of that. But I just don't know what the buyers there were thinking.
Well, my friend, you go out on a limb like Dennis Gartman, but I think your hit ratio is a little better when it comes to stocks. How's that?
Probably quite a magnitude higher.
Well, there you go. We started with a compliment. I'll end with one.
Yeah. Oh, real quick. So Twitter.
Now I'm going to have to give you another compliment, right?
Everybody should read. Bloomberg launches Twitter feed optimized for trading. I'm just going to. Everybody should try to find that link and read it.
And what was that?
Bloomberg launches a Twitter feed optimized for trading. We should probably talk about this next time. But this is like tip of the iceberg type stuff for them. And the stock's down, I think, because somebody downgraded it. But put it this way: Bloomberg fully gets and understands the power of Twitter. I'll end with that.
Okay. Well, I'll tell you what. That'll give the listeners some homework. They can read that, and then they'll be able to ask any questions that they may have for you on our next visit. Sound good?
Sounds good. And I'll put that link in my post today.
That would be great. I'm sure they'll appreciate that as well. So, as always, Sean, thank you so much for joining us. And who knows, maybe we'll talk Friday before, maybe we'll do a little preview. It all depends how things shake out. But
we could do a quick 15, 30 minutes or something.
Yeah, maybe we'll do a little chart talk too, maybe come Friday. So we'll see how it plays out. But as always, thank you so much, Sean.
All right, take care.
All right.